Hello, welcome to the investor update for February. And in this update today, we are going to be covering the state of the market, where the market is right now. It's going to take about roughly 20 minutes or so. And the intention with these updates is not just to inform, but also to educate around what's happening in the space and what's happening in the market. So where is the market right now, right? What is the state of the market? So if you look at last year, Bitcoin was in the news a lot. It ended at the banner year with a drop of 17% in December. But overall, the entire crypto ecosystem attracted more than $30 billion, right? Just last year alone. And the previous high was in 2018. And we attracted more money in 2021 than in all previous years combined. And a lot of this investment is going to go into building out the fundamental infrastructure. And we are going to see the impact of it and the effects of it for the next few months, for the next few years, as these projects and products help build out the underlying infrastructure, spend money on marketing, being able to attract new investors into the space, new players into the space. You might have seen the Super Bowl. We had like 4 ads from Coinbase and FTX and crypto.com, all advertising to be able to get the end consumer's attention, right? Like, for example, Coinbase had over 20 million people that visited Coinbase website from the Super Bowl ad, which is all really bullish for the space overall. But in January, we saw that there was a pullback. It erased more than $1 trillion in market cap. Bitcoin dropped below 32,000, right? We saw a previous peak of 66,000 in November, so almost a 50%, more than a 50% drop. And part of it was because of the uncertainty around the regulatory side of things, with White House expecting to release some executive directives on executive orders on cryptocurrencies. And part of it was because of the fear of the Federal Reserve increasing the interest rate, and also the uncertainty around the conflict between Russia and Ukraine. So all of it led to the temporary pullback. The Federal Reserve has now been requesting comments for CBDC, a central bank issued digital currency. I think it's an inevitability. It's just a matter of time before we have a central bank issued digital currency, which is going to be even more bullish for the entire crypto space, because the transition will be much easier. Another, Morgan Stanley released a bit of research saying that Metaverse is going to be an $8 trillion market by 2030. So it's like 8 years from now. And right now, it's less than 100 billion, right? So it's almost, assuming a linear growth, we're going to almost see $1 trillion a year that is going to increase in market size over the next 8 years. So huge opportunities in the metaverse space. So some of data that we look at to be able to evaluate the market, we look at Bitcoin a lot, because to a most extent, the way Bitcoin goes, the entire market goes. And we want to make sure that we are paying close attention to Bitcoin. So this is one of the metrics that we use. It's called UTXO, which is unspent transaction output, which is the accounting methodology that Bitcoin uses to keep track of the amount of coin that is in every single account. And we look at the realized price distribution, which essentially shows at what price did various investors came in and bought Bitcoin. So right now we have about 20% of supply is underwater, meaning that people bought, 20% of the people who bought it at a higher price, and they are underwater right now. And this was as of end of December. So the percentage, I'm assuming, is going to be a little bit higher than 20%. And what it means is that we have seen this play out over and over again, where we are seeing the coin being transferred from long-term holders. Like, long-term holders actually increased by 16% their overall holdings, as opposed to short-term holders, right? So long-term holders, typically, they have a deeper conviction of Bitcoin, and short-term holders, they are driven by hype, right? They heard about it from their friend and they said, you should buy it. So they get into it from a hype perspective. They don't understand it. And when the market drops and pulls back, they sell and get out, right? So ideally, we buy low and sell high, but most people, they buy high and sell low. And that's what we are seeing is that the short-term holders are declining. There is sovereign supply. Sovereign supply is defined as the amount of Bitcoin that is being held outside of exchanges. Sovereign supply is an all-time high. And what it means is that people are buying Bitcoin from exchanges and moving it into their own individual wallet, a hardware wallet, some kind of a cold storage wallet. And that once it gets there, right, there is very little momentum and tendency for that Bitcoin to be spent. So it removes supply from the current liquidity that's available in the market. And one thing that we have been noticing, especially in the last few months, is there is a stronger correlation between Bitcoin and the stock market. If you look at the correlation between the last few months, there is a higher correlation. And this is, we need to see, because one of the narratives, Wall Street narratives, is that Bitcoin is an uncorrelated asset and investors need to allocate a small percentage of it from an uncorrelated asset perspective. And it's still early to say one way or the other. We are seeing that there is a stronger correlation, not just between Bitcoin and the stock market. All the commodities are having more stronger correlation as we are moving towards a global connected economy. Bitcoin miner net position change. This is another data point metric that we look at, is how much of the Bitcoin that is being mined is actually spent into the market. So before, if you look at it last year, last year meaning like 2020, the miners had to sell Bitcoin to sustain their operation because they weren't able to get financing in any other way. But now, since they have more financing, you see in the last year or so, the net position has been increasing. So right now we have almost 80-90% of the Bitcoin that is being mined never hits the market at all. It is being held in the balance sheet of these mining companies because now they have means and ways of being able to finance their operation. This was a report that was released by Wells Fargo, where Wells Fargo said that Bitcoin adoption follows the same growth pattern as internet adoption. And if the same continues by 2032 or so, in the next 10 years, we should see roughly about 2.5 billion people who would be in the crypto space compared to maybe about 150 million people, which is where it is right now. And what it means for the price of Bitcoin is that it's going to go up in value. And specifically, we see that the Bitcoin settlement volume in terms of the dollar amount actually exceeded Visa's payment volume last year. And this is an important milestone because Bitcoin payment network has been compared to Visa. Visa does about 50,000 transactions a minute, whereas Bitcoin does roughly about 7. So in terms of number of transactions, Bitcoin has a huge way to go to catch up. But in terms of the actual dollar value, the Bitcoin settled about $13 trillion in value last year, whereas Visa network did about 11 trillion. So Bitcoin actually did about 120% of the payment volume as Visa, which is a very crucial milestone. And all of it points to a long-term, pretty bullish prediction for Bitcoin. This is my prediction that we would see $1 million Bitcoin by 2032, maybe even before. And why is that, right? Like based on purely doing more of a bottom-up approach. So if you look at the 4 main use cases for Bitcoin, which is what it's being used for: store of value, corporate treasury, institutional investment, and nation-state treasury. So store of value comparable would be gold. Gold right now, it's roughly about $12 to $13 trillion market cap. By 2032, with inflation, gold will be probably about $15 trillion market cap. And I think that Bitcoin has the potential to capture about 50% of the gold market cap, which will put it at about 7.5 trillion just for that one use case. We are also seeing corporate treasury, companies like Square, PayPal, and others who are allocating a percentage of their treasury towards purchasing Bitcoin. If we assume 5% of cash of global 500 companies, then we would see another $6.5 trillion come into the space. Institutional investment, right? Like Bitcoin is an uncorrelated asset, and institutional investors are allocating, say, if you assume 5% of the institutional asset, then that will be another 4.8 trillion or so. And lastly would be nation state treasury. Countries like El Salvador has now put a percentage of their nation treasury into crypto, into Bitcoin. If you assume 1% of total reserve comes into that, that's another 3.8 trillion. So totally it will be about 22.6 trillion. And if the Bitcoin market cap is 22.6 trillion, there is only about 21 million Bitcoin, right? So the price per Bitcoin would be about 1.07 million by 2032. So super bullish in the long term, and it's a 50x increase. And some of the smaller cap coins in that space has even tremendous potential. So still bullish in our long-term thesis. It's still in play. We are seeing a lot of institutional money coming into the space. We are seeing corporate treasury allocating into the space and nation states allocating into the space. And the pullback in January, people who don't understand Bitcoin, and once interest rate hikes, right, they sell all risk assets, and Bitcoin is considered a risk asset. So there was a temporary pullback, and it doesn't really affect us because we are not short-term traders. We do maybe like 20 trades or so a month, and it only affects short-term traders. It doesn't really affect us in the long term. And this is the price, right? Volatility is the price that we have to pay for outlandish gains. And that is the state of the market. Super excited for 2022 and some of the developments that we are seeing in the DeFi space, in the NFT space, and Metaverse space. And excited for the journey this year. We think that until like summer, we're going to see some super bullish news that is going to come into the space, and also some new developments and new money that is going to flow into the space. So until the summer of this year, we are super bullish. We still do expect a market correction to happen, and we are carefully monitoring that. So having said that, once again, thank you, and we'll see you soon.